怎么办？这再也不是我的。现在我都不想哭了，我就想见他。
Recently, the stock market soared after the CCP launched a series of rescue measures, attracting many new investors to rush into the market. However, the stock market plummeted after the holiday, trapping a large number of new investors who lost all their money. Older investors warned that 90% of stock speculation results in losses, and the stock market is just another way for the authorities to cut leaks, one after another. After the CCP introduced a series of measures to stimulate the real estate and stock markets at the end of September, the Chinese stock market surged for several days, and under the bull market, a large number of new investors entered the market. Many mainland media reported that the number of new accounts opened during the National Day holiday reached millions. One of the leading brokerage firms opened nearly 300,000 new accounts. After the National Day holiday, the Chinese stock market began to fluctuate after just one day of rapid rise. On the 9th, the three major stock indexes collectively closed down. More than 5,000 stocks fell across the entire market. The total transaction volume of the two markets decreased by more than 500 billion yuan, compared with the previous trading day. On October 10th, the total transaction volume of the two markets decreased by 796.8 billion yuan compared with the previous trading day. On October 11th, the three major indexes of Shanghai, Shenzhen, and Beijing fell collectively again, with more than 4,800 stocks declining. The total transaction volume of the two markets decreased by 570 billion yuan compared with the previous trading day. The Chinese stock market plummeted, and new stock investors suffered heavy losses. Mr. Yang, a programmer born in the 1990s in Chengdu, Sichuan, invested 1.02 million yuan in stocks on the 8th and lost 320,000 yuan in 4 days. Henan blogger Brother Hui opened an account on the 8th and lost 800,000 yuan in 2 days, fainting on the spot. On October 14th, the three major stock indexes of Shanghai, Shenzhen, and Beijing fell as soon as they opened. On the same day, Mr. Wang, a new stock investor in Guangdong, told reporter that he raised funds to buy stocks because he believed that the authorities' rescue measures would push up stock prices, but he was deceived. Mr. Wu, a new stock investor in Guangdong, said, "I wanted to exit on the third day, but I saw that the market would increase its counter-cyclical regulation on Saturday, 12th, so I didn't leave. I thought it would definitely rise on Friday, but later I found out I was fooled again." The Ministry of Finance of the Communist Party of China announced that on October 12th, it would increase the counter-cyclical regulation of fiscal policy. However, it did not clarify the scale of incremental fiscal policy, which was the most anticipated issue in the market, causing disappointment. Mr. Wu, if the big players knew there would be any favorable policies on Saturday, they definitely wouldn't have exited. Instead, they would have bought a large number of orders and wouldn't have suffered losses or experienced a sharp drop on Friday. But the reality is that thousands of stocks fell on Friday. I was completely disillusioned. I realized this was a trap. After the hype, you're left to bear the losses. Mr. Wu said that the stock market continued to drop sharply on the 8th when millions of new stock investors entered the market. This is not illogical. It's not about saving the market, but about saving the government. If you still believe the authorities are trying to save the market, you'll be slaughtered. Miss Wang, an older stock investor from Liaoning, said, "You must be careful. We older investors know why stocks rise. No matter how good your company is, if no one promotes it, it won't rise. Stock increases are driven by capital. Mutai was 21 yuan, and no one cared. But big money promoted it, and it rose." The share price of Kuiqiao Mutai once broke through the 1,000 yuan mark, only to fall back to 21 yuan. PetroChina's share price once fell from 48 yuan to around 5 yuan. Miss Wang, in the stock market, 90% of investors always lose money, and it's a matter of cutting leaks. Why is it called cutting leaks? One crop comes in, another crop is cut, over and over. Eventually, old investors are experienced and can't be cut anymore because they see the warning signs and leave before they get cut. Ms. Wang pointed out that older stock investors have learned from experience about listed companies cutting leaks and delisting, so they won't be fooled easily. It's reported that the share price of ST Ruidian, which once had a market value of 100 billion yuan, fell from 90 yuan to 80 cents and was delisted. Wind data shows that as of August 13th, 86 companies had share prices below 1.5 yuan and were facing delisting. While millions of new stockholders entered the market, more than 200 major shareholders reduced their holdings and exited. On the 8th, the net outflow of funds in the Shanghai and Shenzhen stock markets was 170 billion yuan. Mr. Huang, a mainland investment consultant, said, "If a major shareholder wants to reduce his holdings, he'll find some stock critics to hype it up. You foolishly rush in while others exit. They've already sold what they wanted, and they're not going to push it up anymore. What happens? It hits the limit down. And worse, once it hits the limit down, you don't even have a chance to exit, because you can't sell once it's locked down." On the 13th, Chinese Communist Party regulatory authorities reported that Wang Xiaoqing and 3 other shareholders of Beijing Stock Exchange-listed companies took advantage of the hot A-share market to acquire shares, then quickly sold them for a profit of more than 32 million yuan. They were ordered to buy back and hand over the difference. Experts believe this is the CCP looking for scapegoats to appease public anger, and that the so-called market rescue was designed to help major shareholders sell their stocks and get out. American economist David Huang said, "The winners of this stock market wave are the vested interest groups, various bankers and listed companies. It was never about saving the stock market. It was about absorbing retail investors' funds to finance listed companies. Individual retail investors are drawn in by publicity, just like people betting in a casino." Dan Bin, a Chinese private equity tycoon, warned investors on the 2nd, "A shares will inevitably plummet after a sharp rise. If you get trapped again, you'll have a long wait to get out." Crazy bull cuts leaks. Chinese stockholders feel desperate after massive losses. The CCP launched favorable policies to stimulate the stock market on the eve of National Day, but the market plummeted after the holiday, causing many people who borrowed money to invest in stocks to suffer serious losses. Self-media influencers took the opportunity to create momentum and fuel speculation, attracting many young people to borrow money to invest in stocks. Unexpectedly, the stock market rose sharply, then plummeted, resulting in the loss of all their funds. Veteran stockholders revealed that 90% of stockholders in China lost money. Some reports even indicated that stock market novices closed their accounts after only 3 days. According to many stockholders, local governments are currently facing financial difficulties and are heavily in debt, with some defaulting on civil servants' salaries. Many companies, including banks and real estate firms, are in danger. On the surface, it is said to be a market rescue, but in fact, it is to help the government itself. Mainland stock investor Juan said, "I believed in the so-called favorable policies, but ended up being fooled. It was a trap to make us bear the debt. I was completely desperate. This is not to save the market, but to save the government. It allows institutions to borrow money from banks to buy stocks, pledge the stocks, then go to the banks for financing, and use the funds to buy government bonds. The purpose is to rescue government bonds that are on the verge of collapse." Mainland investment consultants revealed that China's stock market is too risky. Many companies lose money and are delisted. IPOs have become an industrial chain. Companies are acquired, packaged, listed, and then sold. After listing, a company can earn billions or even tens of billions of yuan, harvesting the hard-earned money of stock investors. Mrs. Wang, a veteran stock investor from the mainland, said, 90% of stocks lose money, just like cutting leaks. Which company with a prosperous business gets to share profits? None. There are still a lot of 1 yuan stocks, but they all dropped from dozens of yuan. They were delisted 20 days after dropping below 1 yuan. What kind of leaders do you believe in? Long-term holding and adding positions to finance. Last year, more than 100 stocks were delisted. How many state-owned stocks were delisted? I cry every day. Oh, I dare not look at it. This is the path we veteran stock investors have walked. Mr. Ding, another veteran stock investor from the mainland, said, I am someone who has suffered from stock trading. The stock market is designed to rob you of your money. It is a trap. Anyone who gets involved in stocks will lose. What is the necessary lesson to learn? Losing money. China's exports fell sharply in September, and imports slowed down. The Chinese Communist Party once again admitted that the economy has slowed down significantly, while international pressure continues. On Monday, October 14th, data from the General Administration of Customs of the Communist Party of China showed that exports fell sharply in September, while imports slowed down, significantly below expectations. On Monday, the General Administration of Customs of the Communist Party of China released data showing that, in terms of US dollars, exports in September were 303.71 billion yuan, slowing to 2.4%. Imports were 222 billion yuan, slowing to 0.3%. In terms of RMB, exports in September were 2.17 trillion yuan, slowing to 1.6%, the lowest since March. Imports were 1.58 trillion yuan, down 0.5%, the lowest since June, and the trade surplus was 582.62 billion yuan. Lu Daliang, spokesman for the General Administration of Customs of the Communist Party of China, said, in September, last month, my country's exports were 2.17 trillion yuan, an increase of 1.6%. The growth rate has indeed slowed. Preliminary analysis shows that this is mainly due to some short-term incidental factors. Although the Communist Party of China has had to admit that the economy is slowing down, it has once again shifted the blame to the international community, stating that Western countries' investigations into government subsidies and the imposition of anti-subsidy tariffs on Chinese electric vehicles and other products amount to so-called global trade protectionism. Wang Lingjun, Deputy Director of the General Administration of Customs of the Communist Party of China, said, it is mainly due to the intensification of global trade protectionism, weak growth momentum in major markets, heavy debt burdens, and more uncertain and unstable factors. China's exports have slowed, imports have weakened, domestic demand remains weak, and the country is deeply mired in the real estate debt crisis. Economic growth continues to lack momentum. Weak imports will be unfavorable for exports in the coming months because nearly 1/3 of the parts China purchases are used for re-export, especially in the electronics industry.